host. I'm your host, Eric Servala, advisor at CBSR. Thank you for joining us for the next installment in our relaunched webinar series through the CBSR Education Foundation. I'm thrilled to be joined by two remarkable guest speakers today, whom I'll introduce momentarily. If you have any questions during or after the webinar, please send them through the chat box and we'll do our best to respond to them. Before we begin, please allow me to provide a brief overview of CBSR for those new to the organization and an update for our friends of CBSR. CBSR is a professional business association and Canada's original business network for corporate responsibility leaders. We have 20 member companies and engage with 20,000 CSR professionals. We also have a charitably registered foundation called the CBSR Education Foundation, where we do research and run our webinar series through. We are a 23-year-old organization that has been bringing groups together to advance sustainability and create safe spaces for our member organizations to talk about their challenges. We are currently on a mission to promote business in Canada with a national spotlight. Last month, we relaunched our webinar series and had Francis Edmonds from HP and Amy Castador from WWF speak about sustainable procurement. The recording can be found at our website, cbsr.ca. We also recently launched a new research report in conjunction with the webinar on sustainable supply chain management. You can find this on our website under research. And I encourage you all, if you haven't already, to sign up to our newsletter to stay in touch and receive invitations to upcoming webinars. Our November webinar will be entitled The Best for 2018 and feature Wes Gee, Director of Sustainability at The Works Design Communications, and Michael Torrance, Chief Sustainability Officer at BMO, discussing sustainability reporting and best practices. Check it out on November 20th. Our Do Business Like a Canadian campaign will be launching next month and include an exciting traveling events series. For today's webinar, I am thrilled to introduce Marion Oliver, Manager, Sustainable Financial Solutions at Sustainalytics, and Nicole Bedori, Associate Vice President, Head of Environment at TD Bank Group, who will be speaking to us about green bonds, invest in your planet. Welcome, Marion and Nicole, and thank you. We are looking forward to your presentation on this exciting topic.
Hi, everyone. Thanks very much, Eric, and to CBSR for organizing the webinar. It's great to speak to everyone today about green bonds and provide some further insight from our perspective as a second-party opinion provider in the green bond market. Sustainalytics has been in the business of providing environment, social, and governance, or ESG research to investors for over 25 years. We're a team of over 400 people in 11 offices around the world in North America, Europe, and Asia Pacific. I've been with Sustainalytics at our Toronto office since 2010, and I'm part of our Sustainable Finance Solutions team. So I work with green bond issuers providing our second-party opinion service focused on mainly in Canada and Latin America. So as I said, we've been providing ESG insights for investors for a while now, and as investors have started to pay more attention to ESG issues, issuers have been asking how they can attract these responsible investors. So my team is focused on helping issuers answer this important question: how can I attract responsible investors or lenders to finance my bonds or my company? The table below illustrates how the Sustainable Finance Solutions team service fits into Sustainalytics' overall offerings, and I'll speak more in detail on our second-party opinions later on. I'm hoping to cover the following items in the next 20 minutes. So I'll start with the basics of what just a regular bond is and provide some key terms and types of issuers. Then discuss some of the different types of sustainable bonds, including green, social, and sustainability bonds. I'll then go over some current numbers for the global green bond market and developments in Canada. I'll then hand the presentation over to Nicole with TD, who will speak from TD's perspective as an underwriter and issuer in the green bond market. And after that, it'll go back to me to share some information on the steps in carrying out a second-party opinion for a green bond. And as a side note, I guess it's always a little challenging to present to a larger, more diverse group, as people will undoubtedly have different levels of understanding on this topic. But that said, I feel it's best to start with just the basics and build from that. So for those of you that are already comfortable with some of these concepts, I appreciate your patience during the first few slides. So let's start by going over the main features of debt securities, or bonds as we call them. To really get down to the basics of what a bond is, and I'm speaking about a regular bond here, not a green bond especially. Essentially, if an issuer like a company or a government want to raise external capital, that's to say raise money to finance projects or operations, they can do this by borrowing funds. As the illustration on this slide shows, in exchange for the use of borrowed money, the borrowing company or government promises to pay interest and to repay that borrowed money in the future. A bond is called a debt security because the issuer is issuing debt that it has to pay back in the future. So some key terms that you'll see if you read about bonds are par value, coupon rate, and maturity date. The par value is what the issuer will pay back to the investor at the end of the life of the bond. This can also be referred to as the face value. The coupon rate is the interest rate of the bond and will determine the coupon payments which the investor receives. It's called a coupon rate to help prevent confusion between the interest rate promised by the bond issuer and interest rates in the market. The term coupon comes actually from the fact that bonds used to be printed on paper and you'd have to clip out coupons and then deliver them to the issuer to receive payment, just like an IOU. So the maturity date then is the date when the bond matures, or the date when the life of the bond ends. Usually that's 10 or more years. Most bonds have an end date when the agreement is over. This is the date when the issuer owes the investor back that par value. So imagine there's a company that wants to raise money to fund a new project or facility. They could issue a bond to raise these funds. An investor could buy the bond for, say, $1,000, giving their money to the company for 10 years, for example, in exchange for yearly interest payments. So the company gets the $1,000 expand their facilities now. The investor earns an interest payment over a number of years in exchange for lending out their money. And at the end of 10 years, the company has to pay back the original $1,000 and the bond life ends, or it reaches maturity. There are several types of issuers in the bond market. These are all the borrowers of the money, and they can be corporates like Apple or Starbucks. They can be municipalities like the City of Toronto, or they can be central governments like the government of Fiji. So now that we've gone over the basics of just what a regular bond is, let's see how green, social, and sustainability bonds can be defined. So as you may be aware, green, social, and sustainability bonds are regulated instruments subject to the same capital market and financial regulation as other listed fixed income securities. The only difference is that the proceeds or the funds from these bonds are used to finance or refinance environmentally or socially impactful projects. Green bonds are the focus of this webinar, I realize, but I also think it's important to mention that social bonds and sustainability bonds are an important and growing part of the impact bond market. So basically, green bonds finance projects that have positive environmental impacts, like a wind energy facility or a wastewater treatment plant. Social bonds finance projects that have positive social impacts, like access to education or providing loans to small and medium enterprises. It should also be noted that when issuing social bonds, it's also important to clearly communicate who will benefit from the funded projects. For that purpose, a target population should be defined and identified. Examples of target populations could be people living below the poverty line or excluded or marginalized communities. And then sustainability bonds finance a mix of projects that have both environmentally and socially beneficial projects. So for example, a municipality might issue a sustainability bond that would finance projects to improve a water treatment plant and also projects that provide access to affordable housing. So now you can get an idea of the difference. The rest of the presentation will have a focus on green bonds. But before we go into a few slides on the market, I think it's also important to stress that there exists a set of recognized principles for issuing both green and social bonds that provide a set of recommendations and the leading framework globally for issuers to follow. The green and social bond principles were developed by the International Capital Markets Association, ICMA, with the newest version being released in 2018. ICMA was formed 50 years ago. It's a membership association representing both the buy side and sell side of the industry. Its membership includes issuers, intermediaries, investors, and capital market infrastructure providers. ICMA currently has more than 530 members, and it's located in over 60 countries worldwide. So ICMA serves as a secretariat, assuming administrative duties and providing guidance for the governance of the principles. As the principles are designed to be industry-wide, both bond issuers and investors, as well as banks, participated in the development of the principles. So in the next few slides, I'll provide a brief overview of the green bond market and its growth globally and in Canada. So as you can see on this slide, what this slide shows is the global green bond market has grown exponentially since 2012. The Climate Bonds Initiative, an international organization working to mobilize the climate bond market, has projected green bond issuance to reach a total of $210 billion by the end of 2018. Green bond issuance in Q3 2018 totaled around $30 billion. That was actually a 23% drop compared to Q3 2017. But if you look at issuance since the beginning of the year, it reveals a more reassuring trend, with $108 billion in US dollars falling short of which just falls short of 2017 figures by less than 1%. So, and I should also note that Q4, the last part of the year, is often a very busy time for the green bond market. So we'll likely see that total number rise significantly in the next months. So this graph breaks down the amount of issuance from 2012 to the end of 2017 by type of issuer. So you can see that the light blue there, the development banks, have always played an important role in the market. And you can see also there's a significant increase in issuances between 2015 and 2016, coming from an entrance of more corporate and financial institution issuers in the market. So the purple and the dark blue. And the entrance of actually a significant number of Chinese issuers in 2016. In 2017, we saw growth of 78% from 2016, and the issuance of more sovereign bonds. So that's that dark orange at the top of the 2017 bar. From the Republic of France, for example, having a significant impact on the numbers. We don't yet have the breakdown for issuers for 2017, but that'll be interesting to see when it comes out as well. So we can also see a rise in green bond issuances in Canada over the last few years. There was a bit of a dip after 2014, but issuances have risen again since then, amounting to around $3.8 billion last year. Demand for green bonds in Canada from investors continues to outstrip supply, leading to the oversubscription of most green bonds. As you can see in 2017, the biggest issuer was TD Bank with $1.25 billion. It should be noted also at the time of the release of this report by CBI, Manulife had not yet issued their green bond of $600 million. It was issued in November 2017. So that total that number is missing from that total, but they were also at the end of 2017. This table provides a summary of green bond issuances in Canada so far in 2018. The province of Ontario is currently the largest issuer of Canadian dollar green bonds, with 4 outstanding green bond issuances totaling over $3 billion. CPPIB issued the country's largest ever green bond at $1.5 billion this year, and it was the first pension plan in the world to issue a green bond. As of October 2018, these issuances amount to over $4 billion, which is on track to surpass what was raised in total in 2017. And it doesn't yet count the amounts of National Bank and TransLink, which will issue it likely at some point before the year is out. And finally, this table shows how Canada compares to other countries in green bond issuances for 2018. Canada has issued just under $5 billion in green bonds so far in 2018, placing it 8th or 7th if you don't count the supranational issuances. Yeah, so I think at this point I'll hand it over to Nicole to continue on.
Thanks, Marian. Next slide, please. Thanks. So as Eric mentioned, my name is Nicole Vidori. I'm head of environment at TD Bank. My role is really to deliver an enterprise-wide environmental strategy for the bank. And I look at things like environmental risk management, environmental opportunities, as well as helping to create more resilient communities in the face of climate change. And I'm just going to give a little bit of an explanation because I often get the question, why is the bank involved in green activities? And really it's because, 10 years ago, we realized that climate change was coming and we knew that it was an issue that had the ability to really impact our customers as well as our communities and our colleagues. And we made a decision at that point to do something about it. So we've been very active in the environment space for the past decade. And we started, with being the first carbon neutral bank back in 2010. We are on the Dow Jones World Sustainability Index. We're the only Canadian bank to be listed for the past 4 years. In 2014, we were the first to issue a green bond, which is what I want to talk to you about today. And also, we recently made a $100 billion commitment towards investment in finance and other programs towards the transition to the low carbon economy. So next slide, please. So we are very active in the green bond space. And as a bank, it's really neat because we have the opportunity to participate in the market in a number of different ways. So I'll start with issuing. As I mentioned, we did issue a bond in 2014. We issued another one in 2017, and they were hugely successful. Actually, I just noticed a mistake on the slide. So 2017, it was a 3-year bond. I'm not sure why it says XX. But it was good for the bank because what it did, it diversified our funding sources. We attracted new investors to the bank. People who would have never, or companies who would never have invested with us had it not been for a green mandate. The other ways that we participate, we have a huge underwriting team. Well, not a huge one, but we have a small underwriting team on the wholesale banking side. And what they do is they really help other issuers get their green bonds to market. And we're also very active in investing. And what we've done is taken our own investment portfolios and started to take an allocation of that and investing those in green bonds. So really diversifying our investment portfolios as well. Next slide, please. But what I want to focus on today, out of those 3 roles, and by the way, there's other roles that a bank can play, and we're working on them as well. But the one that I want to talk about today is issuing a green bond, and specifically the steps that we had to take or we take when we're issuing one. So these are the 5 main steps at a very high level, and what I'm going to do is go through each of them individually to give you a bit more background. So we'll start with number 1, developing a framework and eligibility criteria. You go to the next slide, please. Thanks. So developing a green bond framework. This is the most important step, I'd say, or one of them, I guess. They're all important. But you really need to set out what you want to do as an organization. What is your objective? For us, we wanted to create a bond that would allow investors to invest in projects that will help reduce greenhouse gas emissions. Our whole focus was on reducing greenhouse gas emissions. So the first thing we have to do is we have to create a document that's going to tell investors about this. So it's called a framework. What you also want to do is make sure it's aligned to a recognized standard, and Marian mentioned before the Green Bond Principles, so that's the standard that we align to. The standard outlines 4 principles: use of proceeds, identifying the process for project evaluation and selection, management of proceeds, and reporting. So what this framework typically does is it starts out with, and these are publicly available, by the way, so you could Google TD Green Bond Framework and you could find it, or you could do B of A or whoever else you want to Google. But it basically has these 4 main sections plus some upfront preamble about what the focus of the bond is. For TD, under use of proceeds, we've really clearly defined what's in and what's out in terms of eligibility criteria. So what are the types of projects that we will fund in the bond? which gives investors comfort that the money they're investing will go towards things that have actual environmental impact. So if you go to the next slide, this is TD's eligibility criteria. We have three main areas that we focus on. One is renewable energy generation, which is pretty self-explanatory. Energy efficiency and management. So this is the majority in this category seem to be energy efficient buildings. So we do a lot of financing for LEED buildings, and as a result, we're able to reduce greenhouse gas emissions through that financing. And the third category is around green infrastructure and sustainable land use. So green infrastructure is something that we're starting to have more focus on because there's just a host of benefits that natural areas and green spaces in our cities and communities offer in terms of not only carbon reduction, but also, flood mitigation, air quality, water quality, quality of life, just so much benefit there. So really, those are the three areas that the green bond would fund. And, this is a very high level description of the criteria. We do go into detail. For instance, if I take an energy efficient building, it must be certified LEED. So there's detailed criteria that we get into there. Next slide, please. So next up is a second party opinion. And I'm not going to go into detail on this because this is really Marian's expertise and she's going to go through this in detail. But, we do work with, folks like Sustainalytics who will look at our framework and say, yep, this aligns to the green bond principles. Yep, TD's framework is robust and meets the criteria there. And really what that does is it's a piece of paper that then we can provide to investors as well to say, hey, we are aligned and, this, don't take our word for it. Sustainalytics, who's a credible third party, has demonstrated that, has done all the checks, and this is their statement of support. Next slide, please. So now we get to issuing time. So now we have our framework, we have our second party opinion, but we really need to engage a bunch of people throughout the bank in order to get this bond to market. So it starts in our group, the environment team, where we're developing this framework, checking the criteria, working with our credit teams to identify different loans that meet the criteria. But then it's really Treasury. Treasury is the group within the bank that issues bonds, not only green bonds, just regular course bonds. So they're the ones who lead the issuance. They manage the proceeds coming in. Our underwriting team in the wholesale bank, they're the ones who help sell the bond. They're the ones working with all the investors. And then we have legal. You absolutely need legal. They're the ones who ensure that you're not breaking the law. So next slide, please. Thanks. So tracking, measurement, and reporting. So hopefully your issuance went well. For TD, our issuances have been very successful, oversubscribed, and as I mentioned before, attracting new investors to the bank. But that's not where it ends, because for a 3-year bond, both of our bonds have been 3 years. We have to provide an annual statement or annual snapshot to our investors to show them that, hey, we did put the money where we said we would. These are the projects that we allocated to. These were the environmental impact or the environmental benefits achieved. And we continue to do that each year of the bond, so 3 times. So in order to do that reporting, we have to be, our team, the environment team, is constantly working with the credit teams to track these projects. And then we measure, at the end of the year, we measure what the environmental benefits were. So, whether it's an increase, or sorry, not an increase, that would be bad, a decrease of greenhouse gas emissions or an avoidance, if we have any energy or water savings or landfill diversion. But then we also go one step further and we do a calculation of the natural capital value. So what is the value that these projects are making in terms of natural capital? And then finally, we put this in a reporting format, and it is usually published in our annual corporate responsibility report. And this is something that is posted on our website as well, and investors can go and check out what the performance was and, you know, what kind of impact their investment is making. Next slide, please. Annual insurance. So this is another important step. So once we do that tracking, that reporting, that measurement, we also engage our auditors to provide an assurance statement that all the money allocated to these loans and all our calculations of the benefits are credible. So our auditor will actually go through and vet each loan and each calculation to make sure that, you know, what our reporting says is actually true. So it just provides another layer of comfort to our investors that their investment has been used for environmental benefit. Next slide, please. This is a summary of our environmental benefits for the 2 bonds that we have issued. So the left side shows our first bond issued in 2014. It was 500 million Canadian. And you can see in terms of environmental benefits, we had over 2 million in natural capital value, and we saved, you know, 26,000 megawatt hours of energy, enough to power over 2,000 homes. I like that. Our next bond, which was issued just last year, $1 billion US. So it's still out there and we're still generating benefit, but we did report on our first year of environmental impact. It's listed there in on the bottom right. And what we'll be doing this year as our fiscal year comes to a close, we'll be again reviewing all the projects funded by the bond and calculating what the actual environmental impact has been. So we will publish that in the new year, but we'll be running all the calculations starting right about now. Next slide, please. So this is, so that's kind of a summary of green bonds, and I wanted to give you a little bit of flavor of where we're looking to. And as Marian mentioned, the green bond space is growing and expanding. We're now seeing social impact bonds as well as sustainability bonds. Something that our bank is specifically looking at is our SDG bonds. We recently launched a new corporate citizenship platform called the Ready Commitment. And it's really about delivering impact against 9 SDGs that we've specifically chosen to focus on. And what we're really having internal conversations about is, wouldn't it be neat to issue a bond that would have direct impact to the SDGs that we are trying to solve for? So that's something we are looking at, you know, and we're working with Sustainalytics on that. So it's really exciting. We hope to move it forward next year, but you know, we'll continue on our bond strategy because I think it's a real positive way to, it's a demonstration of the way that you can marry finance and social and environmental impact, and it's a win-win-win for all. So I'm going to pass it back to Marian, who I think is going to talk about second party opinion.
Thanks, Nicole. I'm happy to take the group through some slides now on the second party opinion process at Sustainalytics and the importance we feel of these opinions for the market. So a second party opinion is a document that provides prospective investors insight into the environmental aspects of the green bond proceeds. Sustainalytics provides support to the issuer to help them align the bond framework with investor expectations and with those 4 core components of the green bond principles that Nicole mentioned, which are use of proceeds. So is the bond funding projects that are environmentally impactful? The process for project evaluation and selection. So does the issuer have a clear and transparent process set up to select which projects will receive funding from the bond? The management of proceeds, we look at whether the issue has an internal system in place to track the proceeds and allocate them to the appropriate projects. And finally, reporting, the issuer's commitment to reporting on how the bond proceeds were allocated and what the issuer commits to reporting on concerning environmental impacts of the projects. And we write the second party opinion on the bond, which is a document that provides our opinion on how the bond aligns with these principles, and also how the issuer's own sustainability strategy aligns with the objective of the bond and what the key environmental impacts we feel of the bond are. The main reason issuers pursue a second party opinion is to provide that additional assurance that the bond is indeed going towards accepted, environmentally impactful projects, and in turn protect them against any potential reputational risk. And on the next slide, I'll provide some further information on what this assurance of impact provides to investors. So the objective of our impact methodology is to communicate to investors that the projects funded through the bond have net positive impacts, and that any unintentional negative impacts can be mitigated or prevented by the issuer. So the first step for us is we assess impact in order to determine if there's a clear positive environmental impact. Here we provide a strong positive opinion if the projects funded by the bond have clear positive environmental impacts, like reducing greenhouse gas emissions or reducing water usage in a region prone to water scarcity. And the second step is that we assess the issuer's ability to mitigate environmental and social risks. And this is in order to provide investors with assurance that the project does not have any unintentional negative impacts or is at high risk of controversies. So there are three things we consider really for this step. We assess the issuer's own internal processes for risk mitigation in order to determine how robust their internal processes are. For example, we may look at their sustainability policies, how well these policies are integrated into the company's operations, as well as health and safety procedures. Secondly, we will look at assessments conducted by external parties, such as environmental or social impact assessments or feasibility studies. And thirdly, we'll also consider alignment to third-party standards to be a credible risk mitigation process, like the IFC performance standards and Equator principles, as well as ISO 14001. To give you an idea of what a typical engagement includes, this slide outlines the step-by-step process we at Sustainalytics follow when developing a second-party opinion for a green bond issuer. It usually takes around 3 to 4 weeks to carry out this process with the issuer. So the first step is usually holding a kickoff meeting where we begin to understand the issuer's green bond objectives. We also gain an understanding for the projects, the eligibility criteria. We ask questions regarding the management and reporting process, and also identify if we need to ask the issuer for any further information. The second step involves carrying out the evaluation of the green bond framework on how it aligns with the principles. We evaluate how the framework aligns with each of those 4 core components, and then we draft the second party opinion. Following this, we send the draft opinion to the issuer to review. They're able to provide any additional comments or disclose any additional information. We then integrate their comments and send the draft second party opinion to our own internal review committee for review, and this usually takes around 2 or 3 days. And then we integrate comments from our review committee and send the final draft back to the issuer. The issuer has a final look, and then we finalize the document. And then we can provide marketing support when the bond is issued, coordinate press releases. We also post the SPO on our website if the issuer likes that idea, and we've posted almost all of our second party opinions there. So that's kind of, yeah, those are the basic steps, and that sort of wraps up our process for second party opinions. Yeah, I'm happy to take any questions or.
Well, thank you so much, Marion and Nicole. That was an amazing amount of information, very succinct and very clear. And I feel I have a much better understanding just in terms of what a green bond is, but everything that goes in behind it from the assurance and investment opportunities and impact and how it's being monitored. So thank you so much for being with us today. I'm going to stop sharing the screen here, and I'll go over to the chat and see what questions we had coming in during the webinar. Oh, we have a comment. Wonderful presentation, Nicole. Thank you. I'm curious about 9 of the SDGs are you eyeing for Which 9 of the SDGs are you eyeing for the SDG bond?
Ooh, that's a great question. I think it's too soon to tell, but I mentioned the READY commitment, and under the READY commitment, we have 4 different drivers to ensure a sustainable and inclusive tomorrow. One of the drivers is Vibrant Planet, and that's really my driver. And under that driver, I'm looking at really 2 things: transition to the low carbon economy, as well as green infrastructure, natural areas, parks and green spaces in our communities. Now, my driver, I know it's a little confusing, but I'm looking at creating impact on 3 SDGs, okay? They are clean energy, climate action, and sustainable cities and communities. So those are the 3 that I'm specifically focused on, but the wider or the broader corporate citizenship strategy is focused on others. But in terms of going back to your original question about the SDGs, like which one would we focus on? I don't know. There's different approaches out there. Like we've seen, Marion can probably answer this better, but I'm not sure how many SDG bonds have been issued, but there have been some. And some take an approach where they'll focus on one SDG, and I think others might take a broader approach. But it also depends what your internal loan portfolio looks like. Like, where are we really making an impact in terms of, are we making an impact in renewable energy by doing a lot of loans in that area? Is it more energy efficiency, or is it, affordable housing is another big one. So there's a number of areas to choose from. But what I'm really focused on in making sure that whatever one we choose, that if it's 1 or more SDGs, that we're really making an impact through our loans.
Yeah.
Marion, do you have any other insights on what's out there?
Yeah, it's definitely an emerging trend, and it's one we like to see. It's the nice thing about the SDGs too is that they're very broad and allow issuers to choose and exactly like you said, Nicole, match up their, in the case for financial institutions, match up their loan portfolio to appropriate SDGs. So yeah, and it's exciting development. We see more and more issuers aligning their bonds more closely to the SDGs, and we hope to see more of this next coming year too.
Great. The next question is, how do you anticipate gender bonds to occupy the bond space?
So yeah, that's a really, really interesting question. So we've seen an increase in interest in that topic for sure in bonds, with CIBC just issuing their Women in Leadership bond a few weeks back. And we've also at Sustainalytics worked with a couple of Australian issuers that had gender impact bonds as well. It's definitely an area that issuers are interested in, especially financial institutions, because you can come up with some innovative criteria to match it to information that's credible and already available, like what happened in Canada with the Ontario Securities Commission's information on the number of women on boards. So it's credible in that way. And it links up really well with the SDG for promoting gender equality as well. So I see that that's a nice matchup, and I think that there'll be more and more interest in that thematic area.
Nicole, do you have any additional thoughts?
I do not. I think Marion covered it.
Great. Can you comment on applicability of green bonds within O&G and other carbon-intensive industries, for example, in support of transitional activities to lighten carbon footprints, develop new product lines, etc.? Any particular?
So I can start, and then Marion, you can chime in. But this is something like for TD, we are focused on the transition to a low carbon economy, and that means that we will be active in the traditional fossil fuel space for some time while growing our renewables portfolio. And I think projects that are able to reduce greenhouse gas emissions, whether it's fuel switching or efficiency, they should be included in a bond. However, TD's framework does not include that. We keep our framework fairly pure. And that's really not because we don't believe in these transitional activities. It's more, what investors are demanding and what they want to see. So if we issued a bond, a pure green bond, we know it's going to do well. However, if we start including, things that could be deemed as, not pure green, it's a little bit of a harder sell. So we haven't gone down that road yet, but I do support any type of project that's able to really reduce greenhouse gas emissions in a meaningful way.
Yeah, and to jump in on that one too, our approach at Sustainalytics is not to necessarily automatically exclude a brown air industry or oil and gas industry issuing green bonds, as long as that green bond use of proceeds is going to fund projects that support the transition to a low carbon economy. So they're going to renewable energy projects, for example, and we would view that positively in our second party opinion. So yeah, we'll see if that happens in Canada. Not.
Great.
But we did have, I don't know, Marion, if you know about it, but the Repsol bond. So that was one example of, I don't have the background on it, but I know that there was some controversy over it because it wasn't a pure green bond.
Yeah, the controversy there was more that the use of proceeds in that case weren't going towards transitioning towards a low carbon economy, and the company itself wasn't part of their strategy. The use of proceeds were more going to there were going to be arguably greenhouse gas emissions reductions through these investments, but they were in the end just making their processes more efficient without a longer outlook on that transition, and that's I think where most of the criticism came from for that bond in particular.
Thanks.
Yeah, sure.
Great. Next question, does social bonds cover any human rights related aspects?
Oh, definitely many. I mean, when you look at, you could define, it's a human right to have access to clean water or access to education or to safe living spaces. So, it's intertwined for sure, human rights issues within some of those key thematic areas for social bonds.
Great, thanks, Marion. The final question here, and it's something that I was thinking about as well during the presentation. Are the bonds made available to the retail market, i.e. individual investors? And I was thinking about it as well. Who's really investing in this? Is it increasing in popularity at the individual level or being put together in funds with portfolio managers? Or is it institutional that's driving this?
From TD's viewpoint, so our two bond issuances have been for institutional investors, and we currently don't have anything for the individual investor, but that's something that, I do want to change because I think it's a great opportunity. And, me, myself, as an individual investor, I'd love to be, investing in green bonds. One way I see that happening, and there's others out there that already do this, is there's ETFs or mutual funds that, buy or hold green bonds as part of the fund. So as an individual investor, you could participate that way by buying a green indexed or a green bond ETF or fund. I do know that CoPower is also a way to invest. If you look up CoPower, they offer green bond investment opportunities for the individual investor. And Marion, I don't know if you know of any more examples.
No, I was going to mention the CoPower example too. But I think, yeah, another interesting driver is this growing contingent of younger investors who are choosing to invest their savings in a way that's aligned with their values. So a lot of the growth of the green bond market is coming from more individual investors, but yeah, it's mainly still institutional investors buying like portfolios.
Okay, that's the end of the questions. So I will thank Marion and Nicole again for this great session today, and thank you to everyone who joined us as well. We look forward to seeing you again on November 20th for the Best of 2018 Sustainability Reporting Trends and Best Practices with Wes Gee from the Works Design Communications and Michael Torrance from BMO. Have a great rest of the day, and bye for now.
Thanks, everyone.